Hey everyone, I haven't been very active because I've been busy with a new job and I haven't been making many different investments. Most of the increase in my portfolio is from additional deposits to existing positions. The reason I wanted to make this video is just to discuss everyone's favorite or most hated stock, GameStop. GameStop doesn't really need much of an introduction. At this point, most people are aware of the company and what they do. Everyone has their opinion or perspective on the stock by now. The short squeeze happened 3 years ago now, and the stock has built up a cult like following. The main reason I wanted to discuss the stock is because they had a $3.1 million net loss in their most recent quarter. This works out to about a 1 cent loss per share in the 3 month period ending October 31st, 2023. Like I said, GameStop can be a very controversial stock. You either love it or hate it. Short sellers have been pointing out that GameStop has seen a reduction in their revenue ever since they've been closing down their stores. While this is true, they are closing down their less profitable stores in order to turn the ship around. Many investors are speculating that the next quarter is going to be the one where GameStop is most profitable. They usually do make most of their profits in that Christmas holiday time period, but investors are speculating that because Ryan Cohen has been turning the ship around, that this one is going to be one where they make much more money than they have before. I personally don't like making short term bets on which direction the stock is going to go. However, if you are an investor looking at the fundamentals of the stock, it is in a better shape than it was during the 2021 frenzy. The increase that was seen then was largely because the short sellers were caught off guard by the large Reddit following it had. I don't think we're going to see astronomical gains like we did in 2021, but I still believe that the stock is currently undervalued. One major factor that I don't think a lot of Wall Street analysts or short sellers are considering is that the stock has gathered a large cult like following. Honestly, at this point, GameStop can create a credit card and just become a financial services company, and they'll get millions of people signing up within the first hour. The stock might not turn around this quarter or the next quarter, but I believe that Ryan Cohen should be able to turn the business around within the next year. I'm currently sitting on 721 shares. I had one put contract to buy GME at a strike of $17 that expired January 26th. I was paid a little over $100 for this contract, so my cost basis for this block will be $16. If you are a bit risk averse, you may want to look into selling cash secured puts to buy GME if the stock dips to $13 or $14. This stock has been an option trader's dream ever since the frenzy. The IV isn't really high right now, but in times of volatility, you can also collect a nice premium selling covered calls. My personal opinion is that the direct registering of shares is just noise. I'm not too sure if it's going to have a material impact on the stock itself, mainly because the published amount of shares that are registered has remained roughly the same for the past few quarters. That's why I don't pay too much attention to that number. At this point, all of Reddit is being watched by many hedge funds, especially ones that short stocks. The initial short squeeze was due to the fact that the hedge fund was caught off guard. In the post GME short squeeze world, I don't believe hedge funds will be caught off guard like last time. If anything, they're probably going to anticipate the rise in the share price, if there will be one, and plan accordingly. That's why I don't pay too much attention to the whole direct registering narrative. I like to buy the stock at a price I'm comfortable buying it and waiting for GameStop's turnaround story. But taking a look at my portfolio, you can see that I have not invested 100% into this company. I treat this investment as my riskiest play and have only invested an amount that I am comfortable losing. The way I see it, if GameStop triples or quadruples in price, I can sell it and add to my existing positions to set myself up nicely for an early retirement. If the stock does end up tripling, I don't plan on selling the entire position. I would most likely sell most of it and then hold a small position in case the stock keeps running. Alternatively, if the IV is still high at that point, I may consider selling some covered calls to lower my cost basis even more. That's it for this video. I know I haven't been making many videos, but these are just the thoughts of an amateur investor who's been investing since 2018. Thanks for watching.